Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Markets Wrap with me, Ryan Huang. And we've got stocks down overnight as we see President Donald Trump ramping up his attacks on Fed Chair Jerome Powell, raising questions about the central bank's independence, while traders receive few signs of progress on global trade talks. So more things to worry about in short. The Dow Jones Industrial Average was down 2.5%, around 972 points, lower to 38,170. The S&P 500 gave up 2.4%, finishing at 5,158, and the Nasdaq Composite was the biggest loser, down 2.6%. And among the biggest losers, we've got the Magnificent Seven, some of the tech titans dragging the major indexes down. Tesla lost 5.8%, Nvidia dropped more than 4%, Amazon shed 3%, as did Meta Platforms. For more insights, we are joined by Michele Schneider. She is the Chief Strategist at MarketGauge Group. Michele, how are you doing? Thanks for joining us.
Good morning, Ryan. I'm doing great. Thank you. All things considered.
That's right. All things considered. And we are considering a lot of things on the table these days with the tariff wars, the tit for tat going on. And so far, with the latest session, tech stocks are under pressure. Walk us through what are your main observations so far.
Well, first of all, I have been talking about not buying tech stocks for months and months and months because you could sort of see the writing on the wall. Back in July, they peaked. And stories were already starting to come out as we entered this year, long before tariffs, DeepSeek being one of the big stories. And of course, once tariffs came into play, we knew that the chip market would be on the chopping block. And now that we're really into it, people thought that this was going to be a temporary situation. We even had the announcement on the moratorium, and then there was going to be an announcement about cutting back on how much tariffs in things like computers and iPhones, et cetera. But at this point now, it's taking its life of its own. And that's really the problem. Plus, I think the administration expected China and South Korea and Taiwan and all these countries to sort of step back and fold, if you will. And instead, they're escalating and retaliating. And, of course, that's really confusing the market and investors because they're saying AI is the future, but why can't we find a floor? And that's how the market works. You know, basically, valuation is only important in a bull market is what we're finding out. In a bear market, you don't really know what valuation is because it's relative to so many other conditions.
Yeah, to your point, we have seen China coming back quite strongly with more tit-for-tat responses. In fact, they have threatened to pretty much hold people to account if they support the U.S. So that's starting to throw a spanner in the works when it comes to Donald Trump's playbook. So walk us through where this is going when you look at how the so-called tug of war in the trade war is playing out.
Well, first of all, this has been, as you know, the Dow dropped over 1,000 points in the U.S. today. The fourth time in a month, and there's only been 7 times in history. So the level of volatility is extraordinary. And essentially, the blame now, although there are still a philosophy out there that this pain is going to be worth it in the end, at this point now, considering that most people are watching their 401s and their IRAs and their investment accounts getting hit, they're really starting to get upset. Right? So essentially, I mean, if you want to step back a little bit, we've got the dollar falling, we've got the yields rising, and we have the stock market falling. And that really makes the administration at this point batting zero, right? And so essentially, it's going to be, like you say, tit for tat, who folds first. And right now, it doesn't look like China's going to be the one to fold. I mean, one of the interesting aspects of countries in terms of how they have developed to this point in 2025, China has emerged from poverty to establish a middle class. United States has basically been seeing our middle class dwindle through the years. with a lot of false hope and entitlement about being able to buy things that are cheap. So it's getting back to the tech situation. Let's look at NVIDIA, for example, right? Because that's the darling of the chip world. And what we're seeing is, although maybe oversold, we can't really get any kind of great bounce. The downtrend certainly shows no sign of abating. And yet you still see people coming on and talking about this generational opportunity. Mm-hmm. And NVIDIA, at this point, looks like maybe it can go to 50. So I think the lesson here is try not to buy falling knives and wait for either the tariffs to settle, the market to settle, the consumers to settle, maybe the Fed jumps in. We don't know.
Yeah, talking about the Fed jumping in. So where do you see them leaning towards right now when you consider two factors to really look at? Here you have what's playing out for the dollar, which is starting to weaken, and then you have possibly inflationary pressures coming through from higher tariffs. And then on the flip side, the economy is going through a bit of a slowdown. So would they be inclined to lower rates at this point?
Well, this is what you just described as stagflation, which is the hardest economic scenario for a monetary body like the Fed to figure out what to do, because they run the risk of goosing the inflation part, and they even run the risk of not really solving the stagnating economy or the declining economy either, because it would send a message that now the Fed is nervous. So essentially, that's why they're sitting there. They're looking at the job market, which really at this point hasn't weakened very much. Mm-hmm. Even though we've seen inflation prices come down, they look at the PCE, it's still not below their target of 2%. And if they're sticking to their guns on that, what they're really saying is they're less worried about the economy and more worried about the impact of the tariffs and the inflation that they can create with supply chain issues that people are expecting the longer this goes on. So that is what's infuriating the Trump administration, because in their perspective, interest rates need to come down, and that will fix everything. And I think that's maybe a little bit myopic.
Yeah, so we do have a couple of things you're watching out for, including the earnings season, which is where people will be tuning in for the commentary, the outlook of what's to come. What are you hearing so far? What's the sentiment and the, optimism that you're seeing?
Well, the only thing I can say that's relatively optimistic, and again, relative being the operative word here, is that there was some green on the board today, and it was all, interestingly enough, pretty in the consumer space. And the consumer ETF, which I like to watch, XRT, although it has broken down and was the first sector to break down back in January, at this point now it's holding on for dear life what would be considered a 6 to 7 year business cycle low. And if it breaks that area, recession would probably be much more of a guarantee. And so like for today, you do have some of the stocks like Kohl's, Kroger's, Etsy, some of those areas, plus some of the healthcare stocks, Novo Nordisk and a couple of others. They have all basically tried to find some footing down here. So if the consumer was the one to really flash the sell-off in January, then it could be that it will be the consumer that tells us that the worst is over. And why would their worst be over in the consumer mind? Because they're starting to believe that maybe the tariffs aren't going to go on for that much longer, or they're not going to have quite the devastating impact that people fear. It has to be more of a perception at this point for the consumer to really come back into the game.
All right, Mish, just to wrap things up, we've got our eye on where else you can diversify your portfolio. And gold these days is on a bit of a tear, up by quite a bit, more than 20%, I believe, in the past year to date. What's your take on where gold is going? Because on some levels, there are many overbought signals right now.
Yes, and I think the thing with the gold is obviously it seems to be the only place that people are thinking is safe. But if you're looking at the gold relative to the silver, what you're really seeing is silver so grossly underperforming. That's where the recession fears come from. So I don't know if I'd be chasing gold at 3,400. That was pretty much my second target. I mean, maybe we can go to 37, 38. But I'd be looking at that ratio to see if silver can start doing a little bit better than gold. I would also really be looking at Bitcoin at this point, if one were so inclined. You don't have, because it is all of a sudden not only outperforming, it's potentially decoupling. It went from a risk asset. Now today it had a pretty good day and has had a pretty good days. So that might be another area to look. Otherwise, I think you have to be patient. And like I said, watch that consumer sector for any signs of things aren't as bad as we initially feared.
All right. Bitcoin up 31% on the year, and we've got gold up 47% on the year, and year-to-date 30+%. And we've been in conversation with Michele Schneider. She is the chief strategist at MarketGauge Group, helping us to give a snapshot of where to look at when it comes to the markets these days. Michele, thanks for your time this morning.
Thank you so much, Ryan.
Great chatting with you. All right, stay on Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.